The stock market is up over 1% on the day, a pretty welcome sign heading into important earnings and after hours like AMD and Snapchat, as well as the Fed meeting tomorrow and Facebook earnings. And then on Thursday, a ton of economic data, Apple, Amazon, and Google that also report earnings. And I have stressed to you guys how significant this week is to the markets. This is the week where you're going to know, are valuations too high? Are earnings coming down? Are they growing? Because right now, economists and analysts have over 5% earnings growth and 11% corporate profit increase priced into 2023. You're going to know if that is feasible by the end of this week, and that will cause the markets to react. Now, maybe the fear is too overblown heading into major earnings, and potentially that's a big reason why you are rallying over 1% on the day here today. All in all, if we can hold above this squeeze level on AMC heading into AMC earnings, that's going to be critically important, and that is a huge thing that I have also been stressing to you guys. Now, APE and AMC are also both positive on the day, and this is really showing you some good momentum, at least continuing with APE and starting to rebound with AMC ever since you did start to sell off over the last couple of days. Now, we have a lot of information to get into. We're going to look at the Ortex data with AMC, with APE, technicals on both of these, as well as the key levels, that squeeze level, the downtrending level that we need to get above or at least stay at heading into AMC earnings. We're also going to talk about earnings across the markets that will be coming out today and after hours, as well as pre-market tomorrow, guys. So we have a jam-packed video for you. Let's get into it. Hit that like button and subscribe to the channel if this is your first time here. Consider sticking around a while. Now, let's get into it. So AMC stock is up about 4.5% on the day. A very welcome sign, like I said. The broad markets up considerably. The Russell 2000 is up 2% on the day. The Nasdaq is up 1.18%, and the S&P is up 0.89%. So the Russell 2000 is really the outperformer here, doing 4 times better than the Dow on the day. You really don't see that. You haven't seen that in a long time. So that's showing you a lot of your smaller companies, your small to mid cap companies are getting that rebound effect today. And that is showing you a kind of risk on attitude heading into this week. I mean, Fed Jerome Powell is tomorrow. That is huge. That is telling you something literally in that right there. So that's big. Now, you didn't really have any news on the day that is causing this rally. It's really just, I think, anticipation that maybe the fear of this earnings season is a little bit overblown. And if that is the case, what would happen, guys? The markets would go higher, or at least not fall off a cliff, because really by the end of this week, the markets are going to fall off a cliff, or you're at least going to hold up these levels or make your way to that 410, 415 level by the end of the week. This is a critically important week for the stock market, and hopefully you guys understand that just by how many times I've said it personally here on the channel, as well as other people, because valuations and recession concerns are going to be the main drivers of the stock market in 2023. Now let's get into the data behind AMC, and let's go ahead and pull it up over on Ortex. Give it a second. It sometimes takes a minute to load all this information. So as far as the live short interest of free float, that is over 23%, sitting at 23.01%. That's huge. Short interest, the amount of shares, I should say, currently sold short sits at 118.5 million, up 141,000 shares on the day. But the cost to borrow numbers are really the golden spot. I think that's where you've seen the biggest activity here today and the biggest jump overall. Cost to borrow average at 367.11%. Cost to borrow max at 494.39%. You have not been at these levels throughout all of 2022. I mean, you got to go back to 2021 in June, where you got the short squeeze to get AMC cost to borrow rates above 400%. That's just unheard of over the last year and a half now. Now, if you look at the cost to borrow minimum, that is at 7.26%, and the cost to borrow rates from interactive brokers is 103%. So all in all, very high numbers. that you are seeing with the cost bar rates, and that, as you know, does go help squeeze shorts out of their short positions. When your cost bar rates go up like this, it's hard to remain in those positions. Now, if we take a look at the option activity on the day, considering AMC is up about 5%, you have seen 45 orders totaling $14.19 million, positive order value of 4%. So not a lot of positive options in AMC today, but as you guys do know, options are not really the driving force of AMC as of right now, and I do apologize for my daughter. She's not having a good day today. I know you guys know what I mean if you have children of your own. Now, as far as APE, the numbers we're looking at here is almost 7% short interest of free float, 35 million shares that are sold short. About a half million shares that were sold short today. Like I said, 35 million shares that are now currently sold short. Cost to borrow average at about 10%, cost to borrow max at 13.33%, and cost to borrow minimum at 7.26%. If you take a look at Interactive Broker short availability, you have over 10 million shares available to be sold short with APE, and the cost to borrow rate at about 6%. And I'm sure by now you guys realize that the actual trade here that people are trading is the conversion into AMC common shares, taking the preferred shares, the APEs, into AMC common stock. That is where the potential is for the gain here. But if this vote does not go through, APE's gonna fall dramatically, and it wouldn't surprise me to see AMC also fall a little bit, or to rip a lot. This is either going to be something that is very bullish in shareholders' minds, or it's going to be a slight negative. And I say a slight negative because I think just fundamentally the business is improving, and that is the most important thing. After all, is, are movies going to theaters? Are people going to see those movies? And the clear and concise answer to that in 2023 is an absolute yes. Now, as far as economic data coming out tomorrow as well, let's go ahead and pull it up for Wednesday. You're not going to get a whole lot. You're going to get JOLTS job openings for December. You're expecting 9.5 million job openings still, down about 1 million from 10.5 million that you've seen in November. So we're expecting a pretty sharp drop in job openings overall, but still 9.5 million job openings is a lot, and it's still like 1.8 open jobs per one unemployed person. So you do still have a lot of jobs out there, or at least that's what the markets are expecting. Now at 10 o'clock in the morning as well, you have the ISM manufacturing PMI for January. This is kind of inflation for manufacturing as well. It doesn't tend to be the biggest reaction in the markets, but if it goes up a lot or down a lot, it can give you a big reaction. Now at 2 p.m. on Wednesday, you get Fed Jerome Powell and the Fed interest rate decision. You're expecting a 0.25% rate hike. If you get anything higher than that or lower than that, that's going to be a really negative thing for the markets. I don't expect that to happen, but Jerome Powell, he doesn't want to see the markets continue to rally, and the markets have continued to rally. So you're seeing loosening financial conditions over the last couple of months. That's not what Fed Jerome Powell wants, and I think that's the real risk here, is that that's not what he wants to see. So he's going to try to do everything he can to get the markets to contract some of that financial loosening, to really get things back in line with a 5% federal funds rate, where they are going to take the Fed funds rate. Now, as far as earnings, pre-market today, you had ExxonMobil, UPS, GM, Pfizer, Caterpillar, McDonald's, Spotify, Phillips 66, and Marathon. None of these caused really a move in the markets at all. You didn't hear much about these earnings besides they were decent. You didn't see any big missed numbers come out from any of these guys. Here in after hours, you are going to get AMD and Snapchat, and I will tell you guys, Snapchat is big for the markets because Apple, Amazon, Google, Facebook, all of your major companies have advertising businesses within their major business. No, it might not be the main business for an Apple or an Amazon, but they are like 20% of their business, right? In a lot of these cases. So if advertising is slowing down, that's obviously not going to be good directly for Facebook, not good for Google. And, you know, those are much bigger companies than Snapchat. So it's not just Snapchat numbers that are important. A $20 billion or less market cap right now, Snapchat doesn't necessarily matter, but what they say about advertising and their guidance will matter to these other companies that matter more to the markets. So this could give you a really bearish tilt heading into Facebook earnings tomorrow and after hours, and then the bigger ones, Amazon, Apple, and Google on Thursday. So it will be very important in that regard. As far as AMC on a technical basis, you are right at this major squeeze level, slightly under it today. It looks like you got a little bit rejected around it. That would be about 530. You did get rejected at that level, but you didn't fall too much. You're at 521 right here, up 4% on the day. We'll see if we do get that sharp end of the day sell-off. It's starting to look like it could go that way, but as of right now, you're pretty close to that level, and as long as you can stay close to it or get above it, I do think you are still in a very prime position to see an upside move. I'm concerned, though, if earnings are bad, that AMC could fall just because they are a part of the stock market and people might freak out and sell off everything because valuations are still in reality way too high for where they should be for a potential down year as far as corporate profits and just overall revenue numbers, right? So I do think valuations need to come down. If that happens this earnings season, it's not going to be good for the stock market, and it wouldn't boast well for AMC also. Now, I do think, I know you guys hate when I say it, I think it's around 50-50, right? Maybe there is enough fear heading into earnings. It's not like we're expecting great numbers. You are in the grand scope of things, but estimates have come down a little bit, and there's almost like this unspoken rule that earnings are not going to look good. But as long as they don't look super, super bad, you're not getting those 25%, 20% drops on earnings, even if they are slightly bad. Like, the earnings have to come in like much worse than expectations, like Facebook back in 2022 or Netflix back in 2022. They have to come in pretty bad, what I'm saying, to get that drop. And I don't necessarily think they'll come in that bad. I don't think they're going to be good, but they're probably not going to be as bad as feared. And that is the best case scenario for this earnings season, as well as for AMC. And specifically, if you break above this downtrending line, that is going to be a very bullish thing. Now, as far as APE, it's pretty clean cut, to be honest with you guys, right? You've seen this rally from 65 cents up to about $2.10. You fell back down to our intraday support level. This was December 22nd. You found support right on this level, and we'll go ahead and mark it because that does look like a very significant level overall. Go ahead and put that one on the chart. Found support again, and it's been off to the races ever since. Now, you might trade sideways here, but it really doesn't look like you've had that pop off top kind of event where you've seen a short squeeze or you've seen people pile into the stock in a major way. After all, you're still down from the levels we were at in October, which would be about $2.85 per share. So I do think there is still some opportunity to the upside, but it might come in late February around the vote time, which is March 14th for this actual conversion. That's why people are buying APE right now, because if you're right on that, if it does happen, you're going to make yourself potentially a lot of money, guys. So I think both of these look very good. I'm definitely more weighted towards AMC. I have a bigger position in AMC. I'm more bullish on the overall short squeeze with AMC. I mean, look at the cost bar rates, look at the short interest, but I do think both of them do have potential, guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. I do apologize. Daughter was screaming a lot in this video. But that is it. You guys enjoy the rest of your day, and I will see you in the next one.